In my previous videos, I spoke about a concept called Mr. Market, showing that the real estate or the stocks could be mispriced, sometimes on the upside, sometimes on the downside. And in my last video, I actually gave an example of one stock that went up and down multiple times, and people could make money either buying or shorting. I don't recommend doing that, but it's an option. So today I want to talk about real estate, and I'll give you an example of recent transaction that we closed. Actually, we closed it 2 days ago, and we bought a small, with our partners, we bought a small lodge in upstate New York. And in real estate, like in just in stock market, you always need to look for mismatched properties. There's always special situations. So sometimes people sell real estate, sometimes the estate sells real estate because somebody died and kids don't want to own it. Sometimes just people need money. For example, somebody wants to do a big deal and they need money for down payment. So they're willing to sell an asset. Could be many variations or reasons why people are selling. And if somebody needs to get out of the deal fast, you can take an advantage of that. It's an opportunity. So in our case, the owner of this lodge, he didn't plan to be a real estate investor, didn't plan to be a hotel operator. He bought it just to get some paperwork, let's call it that. And the moment the paperwork arrived, he just wanted to get rid of the property. Now, the property is small, and he renovated 10 doors out of potential 25 to 27. He operated the property in a way that just not even making money, just breaking even. So with that, there was a potential. There's two-side potential. Number one, you can buy it below the actual price. And number two, you need to look at upside. So in our case, the property was appraised approximately $1.5 million, and we bought it for $3.75. But the biggest reason is that because he has only 10 rooms, and now we can bring it up to 27. So it's going to be a much bigger operation. So here's my message to you. Number one, there's always situations like that. You just need to look for them. If somebody's selling, you need to understand why. There's always a reason why people are selling. Once you know the reason why, you can negotiate and see how you can take an advantage of that, and eventually a good way. For example, somebody needs to get cash, maybe you can negotiate a bigger discount for closing in cash. Number two, you always need to make money in the buy. So if something is appraised at $400,000 and you buy it at $350,000, you have $50,000 of equity in the property from day one. And this is a huge advantage. The appreciation of the property is going to be a bonus, but you need to make money in the buy. Well, I hope it helps to your success.